Welcome to the Inspire to Invest podcast, where we're sharing inspiring stories from business owners, entrepreneurs, and real estate investors on the pursuit of wealth and financial freedom. This episode of the Inspire to Invest podcast has been brought to you by the GeoFocus Group. Hey everybody, welcome to Inspire to Invest. I have Shane Thomas here with me from Catalyst Equity Partners, and he is from Houston, Texas, but originally from Mississauga, so just about 30 minutes on the other side of the city from where I am. Catalyst currently has about 1,900 units under management, worth more than $300 million. He is also the co-founder of CEP Construction Services, a multifamily construction and rehab company, so I can see how those work together really well. Shane leads the acquisitions, financing, asset management, and investor relation efforts at Catalyst, and he also manages his experience in large-scale project management, analytics, process improvement to ensure that Catalyst processes are best in class. So thank you for taking time out of your busy day to be with us today. How are you?
Hey, I'm good, Serena. Thanks. Thanks for having me and appreciate the opportunity and thanks for the warm welcome.
So I find it interesting. Obviously, you are originally from the GTA and now you're living in Texas. Maybe you can take us back to the beginning in terms of where real estate came into the picture for you and then why you made that move. Not only, just as I can't even talk, skip, blah, blah, blah. I can't even talk today. It's going to say a hop, skip, and a jump away.
Yeah. No, we'd be happy to. Like you mentioned, yeah, I'm born and raised in the GTA, and I went to the University of Waterloo.
Nice.
I'm a CPA by trade, chartered accountant. Worked at a Big Four consulting firm, PricewaterhouseCoopers,
Okay.
for 10 years. I started off in the Toronto practice, and then eventually transferred to Chicago in 2010.
Okay.
And at that time frame, 2009 was when I started in real estate. So I actually bought some single family out in Kitchener-Waterloo, a
Yeah.
couple, condos, townhomes. So that's kind of what got my real estate itch. I think growing up, I've always, always had kind of a love for real estate, if you will, even as a teenager.
Yeah.
I just found that, it seemed to be a more proven wealth creation strategy, and although I was in finance and, stocks and bonds weren't really my thing, I liked business and real estate. And so anyway, so I started investing then, not knowing what I know now. And for
Yeah.
me at that time was just, hey, buy and hold, renovate, rent from a long-term perspective, right?
Yeah.
And so this wasn't intended to be a full-time gig. And then I transferred, like I said, from Toronto to Chicago in 2010. And as most people know, 2010 was the depths of the recession in the US, So I moved there when a lot of people were losing jobs. So I had my head down and worked for, 5 years. And then in 2015, I had got married a few years prior and we were kind of, about to have our first daughter. And I just had to kind of decide for myself, like, hey, what do I want in my life? And then, real estate in Toronto obviously had done well and has done well.
Yeah.
And at that time, I said, okay, it was great for in Canada. Let me look into the US,
Yeah.
And so that's kind of where I got my start. I pivoted to kind of multifamily on a bigger scale in 2014, 2015. And I started off with passively investing, like many investors do.
Yeah.
And then from there, we started our company and fast forward to kind of what the background you gave us. We've got just under 2,000 units in Texas and a construction company, and I've been doing it full time for 8 years. So
So
yeah,
what was
that's
the
kind of the
attraction
backstory. Yeah.
specifically to Texas? Because I know other people that, are really bullish on that area. What was
Yeah.
your main attraction?
So I actually started one of my clients in my past life in consulting was in Dallas, right? So I used to travel to Dallas from 2010 to 13 almost every week for 3 years, And so I kind of started liking the city. I saw the pro-business kind of attitude in Texas and then the growth. There was a bunch of folks that I had known living in Chicago, New York, et cetera, that were all moving to Texas.
Yeah.
There was a tremendous amount of job growth. So at that point in time, I was like, wow, Texas is a great place. And me and my wife were like, hey, eventually we would like to move to Texas.
Yeah.
Her parents have actually moved. They moved in 2008 to Houston, and so long term, we knew that Texas kind of was a place that we wanted to be. And then in 2014, 2015, my passive investments coincidentally were in Dallas, right? So I met some folks. I was living in Chicago at the time,
Yeah.
and then we started investing passively in Texas because I knew the market. I
Yeah.
had spent so much time there. And then in 2016, for both personal and for business reasons, we moved to Houston.
Yeah.
So been in Houston since 2016, and I think recently I was talking to somebody. I mean, what Dallas and Houston remind me of is Toronto in the early 90s when I was growing up. Like I could already see the Miltons and the new markets of the world back
Yeah.
then. I could see them in Dallas and Houston. So that's what it reminds me of. Very diverse, and the job growth is very strong. I think the only difference that I see is that in Texas, it's very, very easy to build versus in Toronto, it's hard. And
Yeah.
so supply is always a concern, but from a macro perspective, a lot of similarities.
Now, in terms of your first deal, can you talk about, how you structured your first opportunity? Because obviously going from single family to multifamily, it can be really intimidating to some different people. So how did you navigate that? Did you work with other partners to help you structure it, or like what did that look like in the beginning?
Yeah, so great question. So, like I said, I started off on the passive side. So I was able to kind of see somewhat under the hood for a little bit, right? So I was in a couple deals, and I was able to kind of see what went well, what didn't, what sponsors, systems they had that worked and didn't work. And so at that time I said, okay, you know what? I have a good skill set in terms of project management, finance, accounting, consulting.
Yeah.
And then I met my now business partner at a networking event. And we had no intent to partner. We were kind of just like he had his business, and we were just kind of like peer buddies, if you will, because as you know, I mean, entrepreneurship can be lonely, and so we were just kind of looking for someone to lean on. And then fast forward, he was also passively investing. I think like a year later, I had moved to Houston. I said, hey, I think we can, do a deal, right? And so we came up with our criteria, and at that time, it was like, hey, we can do a $3 to $6 million deal
Yeah.
and we can try to raise 1.5 to 2 million from our network. And so, I mean, we spent, I would say, I think close to like 1 year looking for a deal diligently,
Yeah.
with our full-time jobs and his full-time business. I think I want to say we looked at or underwrote like 110 deals to get our first one, kissed a lot
Yeah.
of frogs.
Yeah.
And then once we got that deal, even though, we had good track records in our small business ventures and in our corporate lives, banks and stuff were like, hey, you don't have experience in multifamily, right? So then we ended up bringing on a experienced partner who had done 15 or 20 deals at the time,
Yeah.
who I had built a good relationship with, who was local to the market, and basically said, look, we found this deal, we've got it under LOI. This is our business plan. So he reviewed everything and he basically signed on as kind of like the experienced partner. And then so it was the three of us on our first deal.
Yeah.
And then from there, yeah, I mean, we ended up raising $2 million. And at the time that was a large, large number and a large feat, and it still is. But I think what I would recommend to your listeners is that I didn't get the deal, and then I think people have this attitude like you get a good deal and the money will come. I don't know how much I believe in that. I think at the end of the day, I was networking and meeting people and telling them my intentions, and people had known that I've been in real estate for 5, 6 years. But like I would say, for 2 years prior to raising the $2 million, we were actively building our network. And so I think that really helped us, capitalize that first deal.
Yeah. Yeah. You're planting
And
the seeds
then
with people.
yes, yeah,
Yeah.
absolutely. You have to, right? Because you can't just get a deal and then all of a sudden you think the money's going to come. So,
Yeah, for sure.
so that was our first deal. I mean, there was a lot of lessons learned. We can get into it, but it was during Hurricane Harvey, and we had multiple financing challenges, but ended up being a good deal.
So now, in terms of those challenges, what would you say is the biggest obstacle that you faced, whether it was on that first deal or just even as you started to scale?
Yeah, I mean, I think the biggest obstacle is that I mean, you're never going to know everything in this business, right? And I think, you know, building a team was very, very important, right?
Yeah.
So, you know, and having a deep bench. I think that's the key, right? Like it's one thing, you know, there's a saying in our business, you got to always keep your vendors honest, right? And there's folks that we've worked with for years, whether it's brokers, et cetera.
Yeah.
But having a deep bench where if some avenue closes down, you have another option, you know, and that's what happened on our first deal, right? I mean, we had financing all lined up, you know, from someone that we knew, and then, you know, a hurricane happened, and then that financing blew up, and the seller at the time, the property kept performing better every month, and he was like,
Yeah.
"Look, I've been under contract. We've been under contract for 4 months. You got one more month, 30 days, and that's it." And you know, we had to use a relationship to kind of, you know, get a loan closed in 30 days, which is not an easy feat in any market, you know. And
Yeah.
so anyway, so that's one of the lessons. And I would say the other lesson in real estate is especially in what we do, is being overcapitalized, right? My first deal, couple deals, I would say, you know, I mean, look, at the end of the day, everyone wants to show good returns, right? So the more money you have to raise or reserves, it dilutes your returns. But,
Yeah.
you know, from being a good steward of people's capital, it's better to have more money
Yeah.
and not need it than
Yeah.
less money and need it, you know? And so that's the biggest learning I've learned over my last 14, 15 years in the business, you know? Real estate's capital intensive. You know, it's not a matter of when it's, or sorry, if something's going to go wrong, it's when, you know, and you got to be prepared.
Yeah, and I
Um,
think whoever's most resourceful will win the game. And I think that's one thing even I've seen in my community in this past year is that, a couple companies did things that were, not well handled, but then there's a lot of collateral damage. So people that were expecting money to come in and, now they're having very significant liquidity issues and cash flow issues, right? So I couldn't agree
yep,
more. Better to have too much money than not enough.
yep,
Now, in
yep.
terms of something that you're most proud of, what do you think is one of your biggest successes so far?
You know, I mean, I think, you know, we try to celebrate our wins, you know, I mean, small wins, that's one of the, you know, key kind of takeaways recently for our team, you know. I mean, I'm proud of the fact that honestly, we've had this vision for the last 8 years. We've grown, and it may sound like a lot of units, et cetera, whatnot, depending on your listener. But you know, I mean, I would say we've been slow and steady. You know, doing one or two deals a year for 8 years. There's
Yeah.
guys that started 4 years after me that have 4x the amount of units, and honestly, they were growing at a time that when things were easier, and now things are a lot tougher for them. So we've been I mean, we've been prudent, slow and steady, and
Yeah.
we've really stayed the course. Whereas a lot of my competitors, you know, they were doing multifamily when it was hot. And, you know, right now, obviously things are a little more challenging. And, you know, those same people are now doing car washes and fix and flipping and oil and gas and don't have the focus where, you know, we've just you know, we're in the trenches, you know, getting better and better every day. And
Yeah.
you know, after winter, there's always spring and things are going to get better. And so I think that's what I'm really proud of. I mean, you know, we've got a good track record. I mean, not every deal has gone, you know, perfectly, right? But we communicate to our investors good and bad. And I think that's what sets ourselves apart from other people in the industry. I mean, you know, we treat ourselves like a small private equity company, and
Yeah.
investors time and time again will come back to us because of the trust and the transparency
Yeah.
and knowing that, you know, we're going to do whatever it takes. And we show that with our actions. So yeah.
Yeah, no, I agree. Now, on that note, we're just going to take a really brief break for a word from our sponsors, and we'll be right back.
Whether you are launching your first development or shifting your portfolio into the missing middle, land development and construction come with challenges. The GeoFocus Group helps you navigate those challenges with clarity, structure, and confidence. With decades of experience managing complex builds, turning around stalled projects, and recovering timelines and budgets, our team is trusted by an extensive roster of developers and investors. Today, we bring that same level of precision to the growing purpose-built rental market, helping both new and experienced developers succeed in delivering needed housing. We support your project from the earliest stages of acquisition and due diligence through zoning, site plan approvals, and permit submissions. Checks. With purpose-built rentals becoming a key part of long-term housing strategy in communities of all sizes, the need for experienced project leadership is greater than ever.
Thanks again for following along with this episode of Inspired to Invest. In addition to real estate, investing, and running my own brand experience agency for 18 years, I also published a book called The Accidental Entrepreneur in October of 2021. This is my story, and it chronicles how I turned tragedy into triumph to embrace my destiny in entrepreneurship. If you're interested in picking up a copy, you can find the link at serenahomesrealtor.com, and you can also find my link tree with all of the retailers in the details below. Thanks again for your support. Inspired to Invest is proud to support the Beyond Success program. In today's complex world, it's absolutely crucial for our youth to learn how to take charge of their financial future. We believe that every young person deserves access to accurate, practical financial information. Designed to bridge the gap, the Beyond Success program leverages a comprehensive educational bootcamp to equip young minds with essential financial literacy skills. At Beyond Success, it's not just about teaching financial literacy, it's also about fostering a foundation for a prosperous and empowered future. Join us. Together we can build a brighter financial future for the next generations. Join us. Together we can build a brighter financial future for the next generations. Hey everybody, welcome back to Inspire to Invest. I've got Shane Thomas here from Catalyst Equity Partners, and we're talking about how he got started out as a CPA in the GTA, eventually moved down to Chicago, and then ultimately into Dallas, Texas, where he's scaled to 1,900 units and over $300 million in multifamily under management. Now, before the break, we were talking about some of those challenges and obstacles as well as your successes. And one thing I always like to ask my guests is what's one of the craziest things that they've experienced as a real estate investor?
Yeah, that's a good question. I mean, honestly, we've seen so many things. I mean, if you think about, having 2,000 units, the amount of hoarding that we've seen, we've walked that many units and stuff. So I think there's a lot of, those type of stories, but I think, one thing from a more of a inspiration type perspective is, when I moved to Houston, I used to drive these streets, night and day and figure out which areas are good and bad. And there's two properties that I own today that in 2016, 2017, when I was just getting started and had no multifamily, I told myself one day I'm going to own these properties, and one day, and then 4 or 5 years later, ended up, that broker sent me these deals off market. And those are two deals that we own today, and they're well performers. So I think, having a vision and, you may not know, kind of how you're going to get there, but every journey starts with the first step, and so I think that's kind of the craziest story. My wife still jokes, like, she's like, you told me that every time we drive by this
You
property, I'm like,
manifested it, yeah.
Yep.
So
So.
now in terms of things like education and advice, what would you say is some of the best insights and advice that you've received over the last few years while you have been growing?
Yeah, I think, when the market was really hot, a lot of folks, I think what happens is, a lot of people get greedy, right? And the reality is one of the best advices I've got is, and I've taken to heart, is that it's never a bad day to take a profit, And so I think, what happens is, like, people, when the market's hot, it's a seller's market, et cetera. Obviously we've seen in 2022 that kind of changed on a dime. So I think it's never a bad day to take a profit. Once you've hit your business plan, look forward to, look towards, executing your exit strategy.
Yeah.
I think that's one of the best things. And then the other thing is, I keep leaning back on it, but you have to, be look at your downside risk more than your upside, right? Because a lot of folks are looking at, the upside could be X, Y, and Z, but the way I look at all of our deals is what's our downside risk, right? Whether I'm a GP or LP, what's my downside? And can you live with the downside, right? Because if you could protect your downside, then the upside could or could not happen, right? And I think a lot of people go in with the, upside first. And I talk to a lot of new passive investors and I say, hey, understand if this deal meets your criteria first, right? And you have to define that.
Yeah.
And don't rush, right? Because just like a train stop, there's always another investment coming. So yeah, that's kind of the some of the advice I'd kind of offer.
So I know you've talked about being slow and steady, and I guess it's been about 10 years to acquire these 1900 units. What would you say is next for you? Like, is it a particular volume of units? Is it a certain amount of cash flow that you want to live off of?
Yeah, no, I mean, I think for us, I mean, we want to just continue growing prudently. I mean, we're at 2000-ish units. I mean, our goal is really to kind of get to 5000 units and then, potentially bring property management in-house and have a fully vertically integrated company. Right now, we've got construction in-house, which is
Yeah,
great. So that's really where we want to be. And then, there are some other, I would say, other businesses that we're looking to either acquire or start that are related to what we do.
yeah,
But yeah, I mean, we really want to, our focus is a real estate private equity company. And, I think, not to say that we're the masters of multifamily, but we've spent 8 years and that's always going to be our bread and butter. But there's a few other avenues that we're looking to grow into.
yeah,
But yeah, no, I mean, we've got a lean team and we want to keep it that way. But yeah, that's kind of the vision for the future. But grow prudently, right? I think right now is a great opportunity. It
yeah,
could be, our version of 2008, 9, 10 that we weren't able to capitalize on because we weren't in the business then.
yeah,
But as you know, when you're in these tough times, it's hard, right? Because everyone says, "Hey, I can't wait till the next downturn. I'm going to capitalize." Then you realize that there's no equity, deals are tough, interest rates are hard, and so anyway, so we're being opportunistic and very active in this market.
Now, how would you say real estate investing has changed your life?
Yeah, I mean it's definitely changed. I would say it's interesting because a lot of people ask that, and I would say I work more than probably when I used to work, but it doesn't feel like work. I don't know how to explain it. Now we have a team, and now we're focused on more strategic things. But the best thing is that we have freedom and flexibility. I've got three daughters. My wife, and we're able to travel, because I could work from anywhere. And I think that's the best thing, right? Like I'm not, and we can kind of make our own schedules. And we've got the team, right? And it's taken 8 years, but that's the biggest thing because that freedom, we enjoy traveling and whatnot, and that freedom from a both time and financial perspective, enables us to kind of live a life that, we couldn't when we were living kind of both working corporate jobs.
For sure. Now, obviously, the name of this podcast is Inspired to Invest. So I always like to ask guests if there's a particular quote that motivates them.
Yeah, I'm big into quotes and personal development. I mean, I think I'll offer two. So one is the only limitations that are put upon you are the ones you put on yourself. And I think the other thing that goes more in line with what I've described today is that if you want to go fast, go alone. And if you want to go far, go together. I think the latter is really what, we kind of prescribe to in this business. It's a team business and, it's you've got to build relationships, not burn bridges,
Yeah,
and do what you say you're going to do. So those are two that kind of I look at often.
awesome. And now, for anyone that wants to get in touch to learn more about what you do or maybe your opportunities, what's the best way for them to reach you?
Yeah, no, I'm happy to chat with any of your listeners. So, best ways would be to reach out to me via email, Shane, Shane, at catequity.com. I'm relatively active on LinkedIn as well, so you could find me there. And then our website has a bunch of free resources. So it's catequity.com, CAT equity.com. We've got a bunch of blogs and free downloadable ebooks and whatnot.
Great.
So
So we'll include all of that in the show notes below. Of course, thank you for your time to be with us for today. And for anyone that is watching or listening, we appreciate your time as well. And if you have enjoyed this episode, make sure that you like, comment, and subscribe below. And you followed along at social at Inspired to Invest Podcast. And remember, when you invest in yourself, the sky's the limit. Thanks again. Thank you to the GeoFocus Group for bringing you this episode of Inspired to Invest. The views represented on this podcast are for general information only and does not constitute investment or other professional advice or an offering of securities. The host and guests featured on Inspired to Invest make no representations as to the performance of any particular investment. Should you decide to make an investment, you are responsible for conducting your own review and analysis. It is recommended that you obtain independent legal, accounting, and tax advice from licensed professionals.